Good morning and welcome to the Daily Wrap from Pepperstone on Monday the 10th of July 2017. I'm Darren Sinden. Right, let's take a look at overnight changes, any price moves that we need to be aware of. These are closing prices from Friday in New York. The one thing that stands out to me quite clearly here, the yen weakness. Weak against the dollar, weaker against the euro and the Aussie dollar. I think that's an interesting theme and perhaps one that was slightly overlooked on Friday, as everybody was perhaps more interested in euro dollar and the idea of this continuance of bond yields rising. Here's a chart of dollar yen. I think you can see what I'm getting at here. This downtrend line clearly being broken. We can see in the red ellipse and dollar yen weakening and likely to carry on and move above 114 if it hasn't done so already in early trade in Asia. So let's move on and take a look at what might be on the calendar in the days ahead, or more specifically today. And let's have a look. We've had some China data out this morning. We had producer price and consumer price index data from China. The one thing I would say is broadly in line, it's safe for this figure. The CPI data coming in at minus 0.2%, so that's double what the forecast was, of minus 0.1%, so a slight concern there about inflation in China. Later this morning, coming out very shortly, in fact, we have export data, trade balance data for Germany. We talked about Germany recently, didn't we, as being the main driver for economic growth in the Eurozone, and we'll see what's happening there in June. Obviously, the Americans are concerned about this, the German current account, which keeps growing, and they talk potentially about that being currency manipulation. Speaking of the US, we've got some data from there later on this afternoon, labour market conditions, and then this evening we have consumer credit change for May. That's coming out around 7 o'clock this evening GMT, or 8 o'clock London time, so that's something to watch for later in the day from the US. Okay, breaking news. Any comment that's caught my eye over the weekend? A few bits to be aware of. Syrian peace talks reconvene in Geneva today in an early test of this newfound spirit of cooperation between Russia and the US that Donald Trump talked about after the G20. Moving over to the Pacific, Australia's 10-year notes fall to their lowest price in 2 months, and so the rise in bond yields continues across Asia, even if it paused for breath on Friday in Europe. The EU-Japan trade deal was not an agreement at all, but more of a PR stunt, says the FT's respected commentator Wolfgang Manchu, and I think that's something to take away and think about over the coming days. And then President Macron of France has set out his tough fiscal plans, including a public sector pay freeze, delayed tax cuts and dearer cigarettes. These are all aimed at curbing France's growing debts, and we can have a look at that situation now in France. Here's French government debt in blue. Here's French government spending. Now spending's coming down, the debt still seems to be rising, so the question is here, what will happen as and when and if European interest rates start to rise? So that's something for the French to consider there. Speaking of thinking about stuff, here's something to take away into the trading day with you, food for thought. And what took my eye was this: a new Ipsos Mori poll of 18,000 people across 25 nations showed that only 40% thought that the US has a positive influence on world affairs. Interestingly to me, Canada is seen as the best example, with 81% of respondents saying it had a positive influence on world affairs, and Australia and Germany complete the top three. Here they are, and here are the readings. So take a moment to look at that and have a think about what that might mean for the world going forward. Thank you for your time today. Please take a moment to look at the risk warning. Trading foreign exchange and CFDs on margin can be a risky business. If you're in any doubt about those risks, please contact your Pepperstone account executive. Thank you for your time, and we look forward to speaking to you tomorrow.